Good afternoon. It's Jeff Christian. It's about 3:45 on Monday afternoon, the 20th of November. I'm recording this for release on Tuesday morning, the 21st, because I'm going to be out of the office tomorrow morning. I want to talk about a couple things: U.S. Treasury gold valuation policies and digital currency realities. It's sort of a public service announcement, this video. There have been a couple things that have been said last week that were gruesomely inaccurate about government, the U.S. Treasury, and the U.S. Government and the U.S. dollar. One of them was attached as an advertisement by YouTube in the front of one of our videos. And I find that offensive, but YouTube assures me there's nothing in hell that we can do to improve their performance of their business. Anyway, the first thing that was said, it was one of these guys who used to be a used car leasing agent. Then he pretended that he had been a major bullion trader in London, or maybe it was New York, or maybe it was Nova Scotia. He was well financed by Eric Sprott and other people to promote conspiracy theories, and he still holds himself out as an expert in gold and currencies and all other things. And he said last week that the Federal Reserve Board is going to revalue gold in 2024. It's patently untrue. And you know it's patently untrue because the Federal Reserve Board doesn't decide what the value of the U.S. Treasury's gold is. Gold is owned by the U.S. Treasury. The U.S. Treasury decides the value. The U.S. Treasury used to call it $35 an ounce in 1973 after they had severed the exchange program between the dollar and gold at the Treasury. They revalued the gold. They made that sever in 71, and in 73 they revalued their gold at $42 an ounce for accounting purposes. It's the Treasury that makes that decision, not the Fed. So you can rest assured that this is just somebody who doesn't know what he's talking about what he doesn't know. The second thing was somebody said that last week the New York Fed had started issuing a digital currency to replace the dollar that would make our dollars worthless almost immediately. Again, the New York Fed doesn't issue currencies. The New York Fed is the operational executor. They execute policies that the U.S. Treasury and the Federal Reserve Board direct them to execute. They don't make those kinds of decisions on their own, and they also don't issue currencies. So those are two things. Now, up here on this page, I have the International Monetary Fund has a weekly blog. And today's blog, just coincidentally, was Central Bank Digital Currency Development Enters the Next Phase. Sorry about the typo. They issued that today. This is a link. You can go to the IMF's website and you can download it. They talked about the status of various central banks moving toward digital currencies. And again, you have to understand the difference between central bank digital currencies and private cryptocurrencies. You could argue that maybe central bank digital currencies are crypto in some way, but I think the term cryptocurrency is probably used to refer to private currencies issued by non-governmental entities with no backing. It's just, the full faith and credit of anonymous people on the internet determine the value of it, which is why if you look at the volatility of a typical cryptocurrency, and you say, where do I find this? You don't find similar volatility patterns in other currencies, large or small. You don't find it in precious metals. Where you find that kind of volatility that you see in private sector cryptocurrencies is on a slot machine. One day it's zero, the next day it's 1 million. The next day it's zero again. That's a cryptocurrency in the private sector. This is central banks moving to a new way to distribute money and to manage money. And it's a very good thing. It's just one page. It's very short. It talks about the three banks, central banks that actually have moved toward digital currencies and have them in place now. There are other central banks that had started to do that, but they pulled them because of operational inefficiencies. And there are about 100 central banks, according to the IMF piece, that are in various stages of planning and research and pre-development because there's a view that ultimately digital currencies will replace the digital currencies that we have right now. Because if you knew, the currency market is primarily digital and has been for decades in terms of volumes of transactions. They're just jots on a computer, and that's a digital currency. One other thing related to money and currencies is that yesterday, Sunday, Javier Milei won the Argentine presidential runoff election and is now the president. He's pretty much of an insane person, ultra-right nationalist, has a lot of really bad ideas. But one of the things he wants to do is get rid of the Argentine peso and replace it with the US dollar. Now, you should know that the Argentine government has used the dollar as a replacement for the Argentine peso in recent decades. This last few years, they didn't work too well. They had financial crises, which are regular occurrences since the 1940s in Argentina. And at one point, they got rid of the peso, and they were using the dollar for a few years, I believe, to try to help stabilize the economy and the financial markets in Argentina. In addition to that, in Argentina and in a number of other Latin American and other countries in Africa and elsewhere, you will find that while the central bank may issue a currency, a lot of the transactions are actually executed in US dollars. So in Ecuador, for a few example, a few years ago, companies started paying their workers in cryptocurrencies. And there was a bunch of hoopla in the cryptocurrency world that, this was the big development. But what you found was that on Friday nights, the workers got paid in cryptocurrencies, and they immediately exchanged them for US dollars because the US dollar is the de facto currency of choice in Ecuador, as it is in several other Latin American countries. In terms of Argentina's economic prospects, we've been there before. In the 1930s, Argentina was the 5th largest economy in the world, I believe. And in 1946, Juan Perón took over. He ran the country from 1946 until 1955, by which time the Argentine economy had suffered so much due to his nationalist policies, his import-export conditions, trade policies, currency policies. He destroyed the Argentine economy. Javier Milei sort of fashions himself after Juan Perón, or the previous president in Brazil. So, interesting times in the currency markets. That's really all I have for now. We do have these 2 market alerts, one on long-term economic policies, one on deficits, debt, and gold. You can buy them if you become a CPM Group client. We'll send them to you as part of your consulting package, www.cpmgroup.com, or send us an email at info@cpmgroup.com if you want to become a client and get those reports. And next week we will be doing, I believe it's next week, on the 6th of December, we'll be doing a open forum for our clients where our clients can ask us any questions about any topics. And if we feel qualified to respond, we will answer those. Go to our website, become a client, buy our yearbooks, become a retail investment product client or a consulting client. In the meantime, take care of yourself and those around you, and let's see what we can do to make this world a better place.